Pradedam. Yes.
Dear all, hello. We're starting our event. So today's our event is MiCA, a new era for financial services. So I am happy that you have gathered here, so many of you, and also I welcome all our online viewers. And you are welcome to be interactive, ask your questions, raise your hands. Also, we have Slido. Slido here, you can scan QR code and ask your questions in the interactive platform. And we have structured our event in a way that first we start with the legal overview of MiCA, prepared by our colleagues from Ecovis Preventus Law. Then we have a guest from the Bank of Lithuania, and we shall overview how the Bank of Lithuania is preparing for MiCA. And finally, the panel discussion, we will discuss with our members about what opportunities we will have with MiCA. So I invite the first our speakers, Inga, Karulaityte, the board member of Fintech Hub and also the partner of Ecovis Preventus Law, and her colleague, Tautvydas Petrošius, to the scene.
Thank you.
So, hello everyone. Can you hear me? No? Hi. So thank you very much for introduction. So today, me and my colleague Tautvydas will present MiCA regulation at a glance. We do not have any ambition to explain everything what MiCA regulates, because this is a huge document, direct application regulation. That means that it will be applicable directly to all the EU member states when it comes into force, but we will present shortly and the main things what we think is the most important for the financial market participants as well as the future financial market participants, and I will try to give my own maybe overview and perspective on what impact MiCA will make to the Fintech Hub LT members, which are mainly the payment service providers. So why crypto industry is important and why it has to be regulated? So in its peak of capitalization in 2021, crypto market reached $3 trillion US dollars. If it would be a country, it would be the 6th largest country in the world. So, and this is about non-regulated market. That means that interest of all the investors into crypto assets is huge. So how it may impact payment institutions, and if it is interested to the financial institutions, you might find Fintech Hub LT Association. So here, the opinions might be different, but I would like to rely on the Ripple and Instant Payment Association of the United States analysis survey on the transforming the way money moves. And they have made a survey of 300 people working in the payment sector from 45 countries in the world, and came to the conclusion that a lot of payment institutions, majority, more than 90%, are interested into the payment provision through crypto, through blockchain technologies. These stated that what are the benefits? So the benefits are lower costs of domestic and international payments. As well, they said that it is much quicker to make these payments and quicker and low costly for the end consumers. As well, it is more transparent to make such payments because of the technology. However, the main issue is the regulatory precise question because as we will speak further, only the EU has established and regulated the crypto market in essence, and the US is lagging behind as other big jurisdictions. As well, people said that it is very important to look into the sustainability of the payment system, and this is what the blockchain as well could ensure. So the main drawback of crypto payments is regulatory compliance and not via regulatory understanding or being used in different jurisdictions. So here comes MiCA, the first in the world regulatory package, and it will enable the European Union to attract even more investments into the crypto industry, as well will ensure, as the people think, and maybe the people who thought about this regulation think it will make EU the first in all the world to attract more investments into the innovative and digital technologies. As well, of course, very important aspect in MiCA is consumer protection, because previously and now the crypto market is a little bit of Wild West concept because of different regulation, and even in the EU, different countries have different regulation, not talking about other jurisdictions of the world. As well, the regulators came to the conclusion and would like to encourage all the companies now, and of course the regulation when it comes into force even more strongly, to put more more attention to the governance of the financial institutions, of the tasks as well, because at the moment, as they are not regulated, the governance is not so strong as it is in the financial institution. So, so in short, this is what I would like to say is that crypto regulation is not only for crypto asset service providers. This is very important for the financial institutions and maybe the companies you represent as the members of the Fintech Hub LT association. This is very close to every one of us maybe, and if people who are working in electronic money institutions or the banks would not pay proper attention to this new regulation, it might be that in some years, 3 years, according to the opinion of 300 people all around the world, might be lagging behind and losing their competitive advantage because of not using proper technology. And detailed overview of MiCA regulation will be presented by my colleague Tautvydas. So this is the short overview of what we will
I have
present.
my own.
Yeah.
Thank
Okay.
you. Thank you. Is this audible? Yeah. Fantastic overview of what the MiCA regulation is all about. And as my colleague Inga has already mentioned, I'm going to go into a little more detail, hopefully not too much, because that is going to be a topic of its own. And it's quite an extensive regulation affecting a lot of different market actors, not just market actors, but the underlying technology and the crypto assets themselves. So, yeah, in general, looking at the slide, we're simply going to go through in broad strokes on who does the MiCA regulation apply to. And that also includes the items, as in the crypto assets that it applies to. And then we're going to discuss the harmonization process, as my colleague has quite rightly said, that it's the only regulation, as in a pack of conditions meant for the harmonization of the crypto industry. as a whole. So it's setting a new precedent around the globe by compiling everything into one place, into one regulation, and then providing that sort of legal certainty that is necessary for any business or any regulated business for that matter to really invest in this industry. And then, of course, we'll discuss just briefly on what can we do at this very moment, because the regulation is going to be implemented in stages. That is 3 stages. The first stage has already started, which basically compels the authorities of basically the relevant authorities that are going to be part of the process of regulating the crypto market to already begin providing their insight in how the regulation should be implemented. Of course, which is something that is closer to ourselves, is basically to our practical lives, is the preparatory work that we can do today in order to prepare our businesses for this future technology, which is not exactly the future, which is already in the midst of our everyday lives. It's just not as regulated as it's going to be in 1 year's time. So, without any further ado, let's go and jump into the MiCA regulation. So now, as you can see in this slide, the MiCA regulation, this is basically the bare bones or the bare structure of the MiCA regulation. And you know, sometimes in this presentation I might refer it to the MiCA, but or just MiCA. So there are basically 2 main branches which divide the MiCA. These are issuers, and then there are crypto asset service providers, or CASPs, as we are more familiar with the term. In terms of issuers, there are 2 kinds of issuers. So basically, non-stable coin and stable coin issuers. Non-stable coins, so that would be, you know, the everyday regular crypto assets that we are very familiar with, whereas the stable coins are the ones that are purporting to maintain their stable value. So, you know, a quick example of that would be USDT. Furthermore, the MiCA regulation also divides the class of stable coins into 2 different groups. So that's ARTs, which means asset reference tokens, and e-money tokens, or I might refer to them as EMTs. Both of these classes, meaning asset reference tokens and e-money tokens, can further be classified as either significant or just normal. Basically, there is no single definition of normal, or just significant, but whichever is not significant, let's consider it to be simply normal. Now, the other main branch is the crypto asset service providers. So for simply practical reasons, I didn't list the services that the regulation covers, whereas the regulation covers 10 different services that are going to be available through the MiCA regulation. But for our practical purposes, these are, the graph shows the entities conducting activities in a certain field which are already being carried out. So that means wallets, swaps, exchanges, consultants, and wealth managers. Basically, to go a little deeper, anything that has to do with either providing custody to crypto assets, providing transfers to crypto assets, operating an exchange of crypto assets, and then the exchange to crypto assets to other crypto assets, that would be swaps, exchange from crypto assets to fiat currency, which is probably mostly provided by crypto exchanges. And then in terms of the consultants and wealth managers, this really relates to either portfolio management or giving advice on certain crypto investments. So, moving forward and jumping into the first class, which would be the crypto asset issuers, and these would be non-stable coins. So the issuance of crypto assets. Basically, The first thing to know here is what a crypto asset is under the MiCA regulation. So, and please accept my apology, but I really don't know this term by heart, so I'm just going to read it. So, by definition, in the MiCA regulation, a crypto asset is a digital representation of a value or of a right that is able to be transferred and stored electronically using distributed ledger technology or similar technology. In very basic terms, what we need to know now is that it includes all of the crypto assets that we can imagine, basically. The only one that I could really think of that would perhaps fall out of this definition, because it does not have the conditions of being having a right or a value, and that could be transferred, is a soul-bound token. And for those of you that are not aware of these soul-bound tokens, it's basically a type of NFT, which denotes a intrinsic person-related quality, basically, that cannot be transferred. So, for example, this would be proof of, let's say, your university diploma or a scan of your biometrics. So these sort of things don't really intrinsically have any sort of material value. I mean, unless it's for you. But at the same time, there is no possibility to transfer this. I cannot transfer my university's degree with my name on it to somebody else, and the same thing goes for my fingerprints. So this is something that might fall out of this definition, but at the same time, it could be, sort of digitally written as an NFT. So it's a moot point. But going back to the issuance of the actual crypto assets. The first prerequisite is that the issuer of a crypto asset has to be a legal entity. So this is a bit of a theoretical pickle, because there are certain entities operating at this very moment, for example, like MakerDAO or Uniswap or Internet Computer, which are not companies in the classical sense. They are governed by a decentralized autonomous organization. So in that sort of sense, they would have to be they would have to become a legal entity, so in that sort of sense, establish themselves. And most likely, just drawing from the experience from financial institution licensing, it's most likely that they would have to be established in the EU, but that's not specifically prescribed in the regulation. And the other prerequisite, which is going to stem through all of the other issuances of any other crypto assets, is the white paper. Basically, crypto asset issuers have to compile, notify, and then publish that white paper of their crypto asset that they're issuing. There are certain exceptions. There is no need to issue a white paper if the crypto asset is provided to less than 150 users per member state. The value of the crypto asset is below 1 million euros for the past 12 months. And if the crypto asset is dedicated to professional, to qualified investors. Now, the exemption from this is also a further exemption, not just to the white paper, but also to other requirements, are airdrops, or the tokens or coins that are provided for free. Now, a very interesting point here is that if the user has to provide their personal data, that does not mean that the token is provided for free. So any airdrops where, in exchange for that token, which is airdropped, the user has to provide any sort of data about them, is not going to be exempted from the regulation. Same thing goes for automatically created crypto assets through either mining or staking. So that sort of safeguards the rights of the consumers that are not, let's say, in a very meaningful sense, conducting a business through staking or mining, but you know, maybe mining and staking for just minor gain. Also, utility tokens. The utility tokens are also exempted, and if the crypto asset is going to be used within a limited environment of goods and services, then that token is also exempted. So, moving forward. Stablecoins. So I'm pretty sure that most of you are aware of the term of stablecoins. In essence, the term stablecoin doesn't really pop up in the regulation itself, not as much in the actual legal text, more in the preamble as an identification of what they are, but the regulation basically uses either asset reference tokens or e-money tokens because it wants to be really specific on the stablecoin classification. So, but in essence, stablecoins are meant to maintain a stable value, which is referenced to a fiat currency. So an example would be a USDT coin, or maybe, what was it, USDC. So that's another example. The difference between asset reference tokens and e-money tokens is basically the underlying assets which are used to maintain that value of the coin. So basically, asset reference tokens can be referred to any sort of asset, whether that's real estate, stocks, bonds, commodities, I mean, you name it. Anything that, or other crypto assets as well. The only thing here that has to be noted is that due to the volatility of the underlying assets that are maintaining the stable value of the asset reference tokens, has to be factored into the company's business model in order to safeguard the redemption rights of the consumers. So let's say if I am going to create a stable coin, issue 1 billion stable coins, and then provide the underlying asset as Bitcoin, then 1 billion worths of Bitcoin would not be sufficient because the price of Bitcoin fluctuates and it does not at every given time provide the redemption rights for the consumers. And the other stable coin is e-money tokens. So now e-money tokens is, to put it simply, it's the same as e-money as we understand it today. And it's actually equated by the regulation itself as in e-money. So the thing is, they cannot be referenced to anything else but to a fiat currency. So if you're issuing e-money tokens, the underlying asset has to be fiat currency. Right. If you remember, I mentioned that both asset reference tokens and e-money tokens can further be classified as significant stable coins. And basically there is a threshold which has to be surpassed in order to be classified as a significant stable coin. This can either be requested at the initial stage of issuing the crypto asset, or it can be like a natural progression of the stablecoin getting traction over time. But basically, the thresholds are that there have to be at least or more than 10 million token users. There has to be a market capitalization of more than 5 billion euros. There has to be 2.5 billion transactions per day, or 500 million euros worth of daily volume traded of that stable coin. a very interesting point here is the concept of a gatekeeper. So if the issuer is a gatekeeper, and the gatekeeper concept is prescribed in a different regulation, but basically what it means is that the issuer or the platform, if we're talking about the other regulation, but basically the issuer is of such a size or its activities are so interconnected with the financial system, or that basically it has so much influence that it can prevent other market actors from entering the market. So this is, as an analogy, this would probably be maybe Google, Facebook, some bigger platforms that can prevent other platforms from entering the market. So that would be in that sort of sense. And let's take an example for the crypto market. That would probably be USDT, because it's really hard for other crypto stable coins to pop up, because USDT has all of the, or at least the majority of the market. And if anyone is keeping track of the news, PayPal has also announced their stable coin. So yeah, maybe USDT finally has a worthy opponent in that regard. And again, the other three thresholds for being classified as a significant stablecoin issuer are also connected to the gatekeeper concept. It basically means that the stablecoin is either really closely interconnected to the financial system and have an impact on it. Yeah, the activities are significantly international, and also if the issuer issues more than one stable coin. So there's that about stable coins in general. Now let's go deeper into, a little deeper, not too much, into asset reference tokens. So yeah, as mentioned before, the main difference is the underlying assets which maintain the value of the stable coin. So that's the main difference from an e-money token. But at the same time, there is a difference on who can issue asset reference tokens. So asset reference tokens, obviously, you have to be authorized to issue them. But in a sense, who can apply for the authorization is basically anyone. In a sense that the regulation itself provides an explanation that it's either a legal entity or an undertaking. Now, the concept of an undertaking in EU law is quite wide, but it sort of opens the door for decentralized autonomous organizations, which in general do not really possess a very concrete legal status. So basically, like MakerDAO could probably be included in this sort of definition of one of the possible asset reference token issuer, provided that they, of course, go through the authorization process. And another thing to note as well is that there is a difference on the authorization process based on what sort of entity applies for the authorization. So for credit institutions, there is a separate authorization process, whereas for other entities, it's a little more complex and a little more in-depth. And the reasoning behind this is that credit institutions, through their, the mere fact that they are credit institutions and they are licensed, and they basically had to already go through a licensing process or an authorization, they have already proved their good reputation, let's put it this way, that does not really oblige them to go to hop through all of the hoops that other entities have to in order to issue asset reference tokens. But some noteworthy items there are, of course, the white paper, a notification, basically of their intention to issue those stable coins, a program of operations, which is more of a technical document, basically explaining both the underlying technology and how it's going to operate on a very practical level. one more thing, which is really important, is a legal opinion. Now, the legal opinion is basically, it has to encompass an explanation of why this asset reference token is considered to be an asset reference token and why it's not an e-money token or a token which is exempted from the regulations application. So that is one thing that they will have to furnish during the application process. Of course, solid governance arrangements, but that is probably in almost all cases a given fact in terms of credit institutions. Internal control, data protection, and business continuity policies, which is basically the standard practice for now. Now, for other entities, it goes a little deeper to include the cooperation with CASPs, so credit asset service providers. This is basically to include any sort of conflicts of interest that can arise from the asset reference token issuer, both issuing the tokens and also, let's say, providing investment advice and portfolio management services, and thereby sort of having the opportunity to offer their own issued assets to the consumers. So there's a bit of that conflict of interest in there as well. And of course, the general information that has to be provided both in financial institution licensing and in this authorization process as well. The shareholder's reputation, shareholder's identity, and all of the relating arrangements with third parties, and also the policies and procedures which are related to that issuance of a crypto asset reference token, or asset reference token, basically. Now, e-money tokens. This is a bit of an oddball, but at the same time, it makes a lot of sense because since it's equated to e-money, e-money tokens can only be issued by either credit institutions or electronic money institutions, because basically that's what they're already doing. It's just that they're having the opportunity to issue another sort of asset on a slightly different system, because the crypto asset system, which is the distributed ledger technology, is slightly different from what we're used to using at this very moment. Now, the center, as I said, since they won't have to go through the authorization process due to the fact that they're already licensed as financial institutions, and that this activity is really closely related to what we're already doing, the center of their, air quotes, authorization, which is basically a notification to the regulator, is the white paper, again. So the white paper has to really explain the underlying technology, the tokens that we're going to issue, and there's one more really interesting point, is that it has to include a basically a description or an evaluation, this is probably a better word, an evaluation of the environmental impacts of the issuance of that token. As you might know, the issuance is not simply issuing and simply writing in a sort of system, a DLT system, that there's an X amount of tokens. It's also about validating the transactions. So the consensus mechanisms differ dramatically, whether that's proof of work or whether that's proof of stake and proof of authority and whatnot. Basically, these different mechanisms of that validate the transactions have different environmental impacts, and that needs to be discussed and evaluated in the white papers. And there's also a very clear mandatory disclaimer, which I might not know by heart, but it basically states that the consumers that are using these stable coins are not protected by investor rights. One more really important thing to note about stable coins in general and e-money tokens is that for their basically for holding these coins, there's no ability to gain any interest. So no more staking your USDT. That's going to be completely prohibited. Right, now going to crypto asset service providers. So as I mentioned earlier, there's 10 different services that are prescribed by the regulation. And in general, they relate either to the custody, management, transfer, operation of an exchange, and the exchanges of those crypto assets. So from one crypto asset to another crypto asset, that would be a swap, and then a crypto asset to fiat currency. And also the advice or portfolio management services in terms of the crypto assets themselves. So again, this is something which is going to really affect some of the market actors which are operating at this very moment. But one thing to really note here is that the regulation also opens the door for crypto asset issuers who simply intrinsically through their activities of issuing a crypto asset will have the ability or will be relieved from the obligation to be authorized as crypto asset service providers due to the fact that the services which they intend to provide closely relate to their issuing activities. So a very general example here would be an e-money token issuer who is also providing custody services and transfer services, because that simply comes with the package of issuing that crypto asset. So they would be relieved from that obligation to be authorized as a service provider. Right, so a few more points to really cherry pick out of this list is that the crypto asset service providers will, they're on a complete obligation to be established in the EU and in the member state where they're going to provide at least part of their services. Now the threshold, again, is not set on what is considered to be sufficient activities in a single member state. So it sort of, again, opens the door for choosing the country that has the least stringent process of authorization. But at the same time, drawing from the experience of licensing financial institutions, usually it has to be significant enough to actually prove the commercial worth of your activities in that member state, so as not to exploit the minor differences in the implementation of the regulation. Now, the legal status of the issuer also will have to be established. So again, if we're talking about a legal status, providing crypto asset services as a decentralized autonomous organization might be difficult. Yeah, and all of the other things are pretty much the same as in crypto asset issuer case. The only thing that is a little different is that there are minimum capital requirements, and they depend on what services you are going to provide. So certain services have a higher threshold of minimum capital, while the others have a lower one. And of course, there has to be a very robust explanation of the actual service that you're going to provide, which is going to be explained through the program of operations. So IT skills, developers, and somebody who can actually, there's actually one point made in the regulation which states that the program of operations and the explanation of the IT infrastructure and basically the whole functioning of the service has to be explained in a non-technical language so that we, the people, could understand it. So there's that. So it's not just about getting the best developers who speak in their own language. It's also about cutting through that professional jargon and really explaining it, so that we could understand it. So now, I'm going to jump into the preparatory work which we can do today. Basically, in a very broad-stroked manner, the first thing to note here is the white paper, because it stems through a lot of different crypto asset issuers and their activities. The governance arrangements. There's a lot of obligations for the companies to provide not only the clear, structure of the governance of a company and the lines of responsibility, but also to identify the different persons which are going to be involved in the management of a company, including both the shareholder, the ultimate beneficial owner, and the members of the management bodies, but also to that extent so as to prove their knowledge, skills, and experience in that specific field. So we're talking about a very specific type of people that will have the ability to be in the management bodies of a company which is going to provide crypto asset services. Kind of a fun fact here is that probably it will not come to anybody's surprise that most of the people which are in the financial industry are more than aware of the crypto asset service industry, but in a sort of a slight sense, during the application process for financial institutions, they had to be kind of walking on eggshells to really disclose their knowledge about crypto, because that would give a sort of an indication of somewhat of a taboo topic in the regulator world. So now these people are going to surface and simply say that, you know what, we also have information about crypto. So stringent and robust governance arrangements with good reputation, people with skills, and also skills not just, I do occasional day trading, but really skills of managing a company and understanding how liquidity works, and basically having the ability to evaluate and preempt any sort of risks that the company might incur. So policies and procedures, well, that goes probably without saying. Anything that that is related to the crypto asset services or the issuance of crypto assets, there has to be a robust body of policies that establishes all of the procedures of the company, and they have to be functional. It's not just about having them, it's also about having the ability to test them. So that is one thing to keep in mind. Again, legal opinion. This is something which is like a requirement of its own. There has to be a legal opinion on the crypto assets that the issuer intends to issue, and basically understanding and providing legal proof that this is, or at least a reasoned opinion, not exactly proof, but reasoned opinion on how these crypto assets are going to be classified and whether they are exempted from the regulation. Now, to that effect, and to bolster the overall preparatory work, please. To bolster the preparatory work for the crypto asset service providers and issuers, the European Banking Authority has issued a statement identifying the core directions where companies need to prepare prior to the implementation of the regulation. So yeah, that cannot happen with a crypto issuer. This would be a fatal flaw in the system. So yeah, the first thing that they mentioned, well, it's actually the last thing, but it's more of a like a prerequisite for companies which are already in the issuing business to basically notify of their intention to provide crypto asset issuance to the regulator. So that goes both ways. The regulator has to also be somewhat prepared to receive these notifications. I'm not quite sure whether that's the case already, but the notification is there. And of course, it's of a recommendation, so it's not exactly a mandatory requirement for now. But it gives proper guidance on what is going to be expected from the crypto asset issuers and CASPs. The legal assessment of ERTs and EMTs. So this is basically a general company's, or the better word here is entities' evaluation of their vision, and really trying to understand whether this is something that they want to do, and the evaluation of the current legal environment in those countries where they intend to either provide those services or issue that crypto asset. The risk assessment is also another item that the entities have to really look into, because it's not just about issuing the crypto asset. It's also about providing that necessary level of business continuity to provide not only the consumer rights attached to those crypto assets, but also the redemption rights and the overall functioning of that either token or crypto asset service. So the risk assessment has to be quite extensive, and it has to be robust enough to really envisage what sort of risks might be involved in that sort of activity. And of course, since the implementation is going to come in stages, this is the right time to already start evaluating those risks, and maybe if there is an ability, since this is going to be a new technology, like the basis of the technology trying to be integrated in an already functioning company, if that's the case. Perhaps there are possibilities to have like a sandbox type of scenario testing, which would allow better insight into the risks. And of course, basically the evaluation of the MiCA regulation itself, because it's going to come. We already know what the rules are going to be. It's in force. It's just being implemented in stages. So having guidance from the European Banking Authority's statement, and then really focusing on fulfilling those requirements which are going to be mandatory once the MiCA regulation comes into force fully. Now going into more detail about where else does the EBA statement go? It basically states that the companies have to maintain a very high standard of disclosure and fair treatment of their clientele. So this basically means that the fair treatment is that your white paper has to establish the different categories of users and the different, let's say, method of operating with those users has to be publicly available, so that there is no sort of mistreatment of one client or the other. Yeah, a very well-defined business model, which is basically goes without saying. Again, sound governance and risk management. This is to really evaluate the people who you're going to choose for your management bodies. So it's not just about taking people who have sort of experience in the crypto industry, but they all have the same experience. So a more varied management body from people who have different experience in the same industry would probably be a better arrangement, because it would provide greater insight into the possible risks and, of course, the knowledge sharing in those management bodies. So yeah. Now, in terms of the policies, robust reserve, recovery, and redemption arrangements. This mostly talks about policies and procedures. One thing to note here is that, for example, in e-money token issuance, the issuers will have to provide reports, and these are monthly reports, on the amount of users that are using their stable coins, and provide the exact numbers and figures of their issued stable coins, which is not in itself a very dramatic thing, because most of these stable coin issuers already do that. It's just that it will have to be, well, formalized in terms of the application of the regulation. But that has to be there. Also, audits. Audits, what I would like to mention here is probably going more into the technological decisions when compiling your business model and choosing the right technology for your specific business model, which would allow you all of the, which would allow you to be compliant with all of the reporting requirements and all of the audit requirements that the MiCA regulation prescribes. So, yeah. Perhaps looking into the technology itself and in how it works and whether it's really a good match for your business is definitely something that the market actors have to look into. And of course, when you have a report, it has to be communicated to somebody, which is usually the regulator, so, and other competent authorities. So basically, trying to compile a procedure which would be effective in using that new technology, that distributed ledger technology. So yeah, this is something to really test out if you have the ability to do so. Okay, so a quick recap. The MiCA regulation enters into force in stages. So the first stage, as I mentioned, is already fully in force. The EU institutions are starting to compile these technical standards and, well, explanations on how the regulation has to be implemented, as you saw from the EBA's statement, and also some technical guidance as well. The requirements for stablecoins are going to enter into force already next year. So if we're talking about e-money token issuers who are, or credit institutions who are more than familiar with the requirements for policies, governance arrangements, the testing of the underlying technology, know that this is not not too much time left to really be fully prepared when the regulation enters into force. And the full entry into force of the regulation is going to be by the end of next year. Now, again, as my colleague has quite rightly said, this is a very robust body of conditions, obligations that really requires a lot of attention, not just to read through it, understand it, but really understand the underlying technology and its capabilities, and also the risks involved with that technology. So, for now, we have a certain regulatory regime which is more of a reactionary type, basically allowing the technology to develop to a certain point until it's no longer feasible, and then we simply need some regulation which was compelled from bottom up. Whereas the MiCA regulation is basically the apex of this whole regulatory environment, saying that the time has come, we need to regulate this across the whole Europe in a way that would be harmonized and which would allow investments to flow into the to this market, and also open the doors and create the environment, like a very positive environment for growing that underlying technology. Because it's not just about the crypto assets themselves, it's also about the technology and how it can be used, for example, in this case, in the financial system. But it goes way beyond that. So there's that in terms of a recap. And yeah, thank you. Thank you very much.
Thank you, Tautvydas. Maybe audience has some questions, or you have your opinion and you want to comment. So you still have time. I have two questions on Slido. So the first one is, what does significant international activities mean? If EMI can provide services in all EEA, does that mean its activities are significant internationally?
That's a fantastic question, and that is a great question for the regulators and the the relevant EU authorities, which are, I'm quite sure, hard at work in compiling these technical standards and explaining these different thresholds, because there is another requirement for the company to be providing services within the country where it establishes. So there is no threshold for that either. So really, it's really hard to say what sufficient or significant or inadequate interconnectedness is. So, but there are other indicators which we can sort of draw experience from. Is basically the gatekeeper concept, which means that the significance might arise from the fact that it is preventing others to participate, perhaps. So that would be the general answer.
Okay, thank you. Another question is, will DeFi services be really forbidden? What is your view on that in the light of current version of MiCA?
Well, DeFi in itself probably has a lot of risks, inherent risks that apply to it. So in terms of complete DeFi, perhaps that is going to be hard to attain, especially when the CASPs have to really establish themselves within a country, an EU country. But at the same time, I'm kind of feeling positive that DeFi has already proved to a very significant extent that it does add value to the overall market. And since the MiCA regulation in its preamble is really trying to establish itself as a regulation which safeguards the development of the underlying technology, I would lean towards the fact that it might affect DeFi, but may not prohibit it completely.
Okay, thank you very much. So, Tautvydas, Inga, thank you for your presentation.
Thank you.
Thank you. And now I would like to invite to the stage the guest from the Bank of Lithuania, Denas Gadeikis, the head of the supervision of EMIs and PIs at the Bank of Lithuania.
So, hello everyone. And thank you for your presentation. It was very nice and beneficial for me as well. I think I will not dig into the depths of regulation itself. I will try to focus on supervisory policy as such and what we have done so far to prepare for MiCA and what will be done from the Bank of Lithuania's perspective in the future. I think, first of all, it's good to grasp what we are dealing with in this market. And as I have June's numbers, and we have around 440 CASPs in Lithuania, which is putting into the perspective in the EU, it's the second largest market in that regard. Just a disclaimer, currently it's not supervised by Bank of Lithuania, it's supervised by FIU, mainly from the AML perspective. And you've seen that at the end of last year we had 850 CASPs, and when new requirements came into force, basically enforcing some capital requirements, reputation requirements, management requirements. So the number declined, but then it started raising again, mainly due, of course, there's no prudential supervision, so I think no one actually supervises them prudentially, only from AML perspective. But I think our market is quite favorable because you don't need to go through licensing process as such. It's only a registration. We do have high number of EMIs, PIs, so EMIs tend to work with crypto, with CASPs as well. There is a tightening regulations naming countries, example Estonia, and law firms as well, quite aggressively, what we've seen so far, promoting Lithuania as a favorable jurisdiction. So, but it's not just a number of CASPs which is significant, it's also their scale as well. So we have like 3 examples, and their scale is quite huge. One has like 3.5 million customers, quite large turnover, 500 million per day, and it's like top 30 crypto exchange in the world. Another exchange has 5 million customers, another has 8 million customers, and one of the highest turnover in the world per day, and it's one of the largest crypto exchanges in the world. And to put it in perspective, weekly turnover from Lithuania to other countries is like 600 million euros per week. So for Lithuania, I think that's quite a significant number. So, which is something to comprehend, I think, and to see it might have some risks in itself. And here comes MiCA, and as it already put, it's quite an extensive legal act, putting a lot of prudential requirements and business conduct requirements, and therefore meaning that it needs a lot of supervisory resources both for authorizations and supervision itself. What it means, so currently Bank of Lithuania supervises 800 financial institutions. And when you read MiCA, we understand that around 200 licensed financial institutions would be able to provide MiCA-related services one way or another. And we have like 440 CASPs, assuming we are all get licensed or authorized, so it would increase the number of supervised entities by 50%, basically. So that would be quite a large scale, meaning a lot of resources needed for supervision. Also, MiCA is not technology neutral, which is quite a complex thing because you need competences not only for regulation itself and risk assessment, business nature analysis, but you need to have some tools for analysis. You need to understand how the LT works, etc. And you have to have tools for analysis because now it's quite hard to analyze the crypto market. You have some tools, chain analysis and so forth for analysis, but you need more tools for that. And I think maybe some issues will be solved when there will be reporting requirements, when you will see what the nature and scale of the services are. So timeline was presented already, but I will try to focus as well on stablecoins because the rules of MiCA will start apply from June of next year, and by this time, probably majority of technical standards will be issued, and all EMIs, credit institutions, or other institutions which already issues MTs and RTs in view will have to comply with those regulations. Or those who intend to provide those kind of, or issue those kind of tokens, we have to notify the supervisory authority. And I think level 2 regulation is very important as it will, because devil is in the details, as I tend to say, and the application of MiCA will be the hard part. Nobody across the EU, in terms of supervisory authorities, ever dealt with crypto market. It's a bit of a different beast from traditional financial services, though it has similar characteristics, similar risks, as I will cover it later. But I think level 2 regulation will help to solve some issues in that regard. So EBA has started some consultation papers for level 2 regulation, and ESMA as well. So I think, and now everyone can have comments on those level 2 regulations. So I also want to invite financial market participants to send comments to EBA and ESMA, as it's available on their website. But also NCAs, including Bank of Lithuania, also actively participating in working groups of EBA and ESMA to, first of all, to understand the regulation better, but to also have a certain impact on that regulation. There you go. So it was actually also presented by our colleagues here, EBA issued statement for e-money tokens issuers and asset reference token issuers. So I will not dig deep into those principles, but I think I want to put emphasis on principle 5 because I think communication is key. First of all, to understand what are the intentions of financial market participants, whether we would like to issue e-money tokens or asset reference tokens. And also, I think it could be a way to work together, both with Bank of Lithuania, together with financial institution, or how to interpret some rules, how we apply and what our expectations, how we see the risks. I think it's a good way to learn both for financial institutions and for us as well. Because it's not only for financial market participants, which is quite new. I think for us it's very new as well. And there is a template, I think, available on that statement, and it's on EBA's website. It's just a way to communicate the intentions, what it would look like in terms of issued e-money token or asset reference token. So right, so why do we need those rules? I think that's the key question. So I think that's why we need prudential requirements, reserve of asset requirements, own fund requirements, because stable coins itself is not a very good word for such coins, which tend to have the same risks as, for instance, credit institutions or any other financial market participant, because like in Terra USD case, there was a liquidity mismatch and it was prone to market risk, which it's like Silicon Valley Bank. There was something going around, someone knew that it invested its assets into like long-term bonds and so forth, so it has a liquidity problem. So the same is for stablecoins. So that's why you need a certain amount of reserve assets, you need a certain amount of own funds to cover the losses and if any market risk materializes as such. So does MiCA solve those risks? Of course not. It depends on how we are managed from a financial institution standpoint, but also from a supervisory point of view, the level of intensity from supervisor, and so forth. So I think the key policy statement said today is, first of all, that the position of Bank of Lithuania on crypto assets is still valid. I know in the media we had some gossips that maybe it will be revoked or something. Maybe it will be. Of course it will be. It's a question of timing, because MiCA basically says that crypto assets are legal. So it's just a question of timing. So it's valid until the BOL publicly states it's not valid. And probably everyone will know that it's not valid. It will be on our website. Another thing is that we conducted a survey on the possible provision of crypto-related services by our licensed financial institutions. So we will not provide maybe very details of that survey, but I think the key messages are that only a tiny minority of all financial institutions are interested in provision of crypto-related assets. Financial institutions which would be able to provide those services according to MiCA. But of course, majority of interest to provide such services comes from EMIs, which is expected as EMIs tend to have a close relationship with CASPs and crypto world as such. But interesting thing as well is that a very tiny minority is interested in AMTs and RTs. And I think that will probably change with time, and once people learn how regulation works, when there's more certainty from regulators, how we interpret some rules, when there's level 2 regulation in place. So it's probably change, and I think survey is not very good source of information about market's intention to provide services, and it will change probably with time. So what we have done so far and what we will do in the future. So we have an internal working group because we need a lot of different competences across from different BOL's units. MiCA covers investment services, capital markets, payment services, EML, and so forth. So I think all those competences now are sitting in one working group and working on different areas of MiCA, different problems to solve, and so forth. So first problem is we have to understand the situation in the market, especially in CASPs, because we are not supervised by us. And we would like to see more from supervised financial institutions about their intentions to provide crypto asset services. Also, we work together with other NCAs and their experiences, because it varies from member state to member state. Some member states are supervising quite intensively the crypto asset providers and so forth, and we allow financial institutions which are supervised by NCAs to provide certain crypto services. So try to learn from their experiences as well. So that's why raising competence is important. And so we do various staff learnings. We have Digital Finance Academy organized by European Commission and NBA. So we participate on all those, and at the same time, now we would like to form certain expectations to the market, what we will expect from, firstly, from the issuers of EMTs and RTs. So we are forming those expectations. But I think the principles of governance, risk management, internal control, to a certain extent, are similar to what we already issued in the previous DRCO's letters. So those principles will remain the same. Maybe there is some tiny details in MiCA which are different, but still principles remain the same. And of course, the big thing is in our organization, how we structure that. Do we need a separate crypto asset supervision unit, or do we distribute across different supervisory units? So it will depend on the fact who will supervise CASPs and to a certain degree. And I think in this autumn we will have a final answer who will supervise this and how it's distributed across the FIU and BOL. So we're working on MiCA implementation in various EBA groups and ESMA groups. So what's next to come? So I think we need reports to prepare for supervised financial institutions. We also are planning a BOL event to introduce MiCA to financial institutions. I think registration is already available, and it's open until 8th of September. So it could be found on our website. And I think we will create a separate section on BOL's website dedicated to MiCA, that everyone would be, it would be easy for everyone to access all the relevant documents in terms which are applicable to their financial institution. So I think that's everything for me. I've tried to be concise, so I hope we have some questions.
Thank you very much. The audience, do you have any questions? Well, I have one question in Slido. You have already answered that in autumn you will have more information about who will supervise and how it will be, CASPs will be supervised. Here, the question, does Lithuanian EMI has an obligation to notify BOL before starting opening an account and onboarding WASPs? If yes, which legal act regulates this requirement? If you have already an answer to that.
No, I think that's a ML question. I'm a prudential supervisor. Okay. So there is no, our position is that the crypto assets would be separate, services related to crypto assets would be separated from the authorized financial services or traditional financial services. So that's the position, and it's still valid. Onboarding, it's a different thing, so it's risk-based, but I can't comment much about that.
Okay, thank you. One more question. Will the Bank of Lithuania accept the application right away when the MiCA will be applicable? And how the authorization process will be handled? Again, if you have already...
No, we're still deciding how to do it and to see the impact and how to make it easier, but we don't have any details as of yet.
Okay, thank you very much and for your presentation. And now we shall have a panel discussion, and I would like to invite Alexandre Pinot, the moderator of the panel discussion, the board member of Fintech Hub Association and co-founder of MLIs.
I have almost an hour for the panel. I will just put my stuff over here. Maybe a bit less. Sorry, we are a bit late. So we will have maybe 45 minutes. The idea of the panel today is pretty straightforward, of the whole event as well. The idea was to basically try to sit and understand what MiCA means for our members at the Fintech Hub Association. Most of our members now are EMIs or PIs, and we basically wanted to try to understand what this regulation meant, what opportunity it will bring, and what we should all be cautious about. So that's basically why we're here, and that's also what we're going to try to approach and discuss during the panel. So for that today, we have a very diverse profile with us. We have Inga, you know Inga from Ecovis, and she's part of our board as well. We have Denas. Thanks for the presentation, Denas. It answered a lot of questions already, but I'm sure we will have many more. We have Indrė from Nuvei as well, and Darius from Bankera. Hi, everybody. Thanks a lot for joining us. I will just need to open my little stuff. Can you go do that?
Yes.
Sorry. So I have a lot of questions. I had to list them all here because I have absolutely no memory, so bear with me for a second. Maybe a quick, very quick and informal intro as well before we get started. We already had a few key dates and key items to set the scene and give some element of background. I think we can start with something which is not, it's not a scoop, but I don't think many people know it yet. When we started to learn about MiCA at the Fintech Hub Association, we asked ourselves many questions as to what it meant for our member. And we also started to ask ourselves whether we should enlarge the association and start to accept virtual asset service provider. We had very heated discussion, to be honest with you, as to the benefits, the risk, and ultimately, I think all the board came along as to the fact that the virtual asset service provider ecosystem in Lithuania, as it is now, very much reminded us of the fintech ecosystem as it was 5 or 6 years ago. Not very mature, a bit of a Far West ecosystem, but willing to get along, willing to have a more formalized ecosystem, and willing to learn. So that's how we decided to start accepting crypto. I think I can skip the key dates. I was going to give you a few key dates as to the implementation of MiCA. I think the main item is to remember is that both the ESMA and the EBA have issued a series of guidelines, very interesting guidelines, and consultation. So I guess the message from the association is go and participate to this consultation, ask questions. You won't understand everything at first, and that's why the consultation are here. The regulators are exactly like us. They are drafting regulation and realizing that there are shortcomings as well. So that's why we need to discuss. That's why we need to dialogue, and that's why we're here as well. So use this consultation, ask questions. That's the right moment. It might not be as easy afterward. So this said, I will start with a very populist and binary question, I guess. We started to answer that, but I would still like to hear your overall opinion before we start into detail in the discussion as to whether you see MiCA as an opportunity or a threat for licensed financial institution. I'm talking again more EMIs, PIs, well, more EMIs. Who would like to take this first very broad question?
I can. Am I on?
I can give you mine otherwise.
Making sure that it doesn't go down. Okay, I'll take it first, I guess. Well, for me, MiCA is a mixed bag, so to say, because it very much heavily focuses on consumer protection and investor protection. And even to a certain point that it's almost the main purpose of it, to make sure that consumers are protected when they engage with the crypto services. Of course, you cannot deny that there are prudential requirements and everything, but in the end, they serve the purpose of protecting consumers. So, you know, that they engage with a company that is well-governed and so on and so on. And when we discuss MiCA, I think sometimes we overemphasize what it actually brings to the table. We almost like sometimes find ourselves in this enthusiastic tone, thinking that, you know, now it's the day of crypto, everything is going to change and everyone is going to use crypto for payments and whatnot. I don't think that's going to happen. MiCA doesn't change the accessibility, at least in the short term, it doesn't change that at all. In long term, because of the legal certainty, it might attract larger institutional players to the field that will invest in marketing, in research, and of making crypto accessible, making it cool, not something that, you know, only nerds use. And that might change over time. But in the immediate future, I think it's only good for consumers from consumer protection perspective. For market participants, it's of course an additional burden, but what better time than now? It had to come sometime, and as you rightly mentioned, the market in Lithuania especially does resemble something with the EMIs and PIs 5 years ago, so better now than later.
Thanks.
I would like to comment as well. Sure. So I'm coming from a licensed EMI. We actually see it as an opportunity. We already started preparing. So first, we started to analyze what potential products we could provide to the clients. And as of this moment, we see that there could be a possibility to hold the crypto. There could be payments in crypto, and as well as issuance of e-money tokens. So first is to decide what is beneficial to provide. Another point of it is how to find very reputable partners to go with, because from a technological point of view, you need to have them. As well as now it's not very clear, so what would be the notification or licensing requirements from Bank of Lithuania side or FOU, so we will look forward to see what will happen next. But yeah, we already started looking into that, and there's a lot of work to be done. It's not only to make a business decision whether to go into that or not, but as well to understand all the applicable requirements and to prepare for them, as there will be quite a lot of them.
Thanks. So that was actually a part of my next question, whether you started to prepare for MiCA before it happens, now or even before. I think everybody's read yesterday or this morning the fact that PayPal is going into crypto and is going to issue its stablecoin, so what we will call in Europe as ART, I guess. We've heard later this month and earlier this month and last month, the month before, sorry, Société Générale, a big French bank, and I think it was Deutsche Bank as well, announcing they were basically planning to go into that. One question which is very interesting to me, and I guess to a lot of our members here, is when it comes technically to the payment structure and the payment infrastructure specifically. Do you think it is already, or it's going to be a hassle for those of the EMIs or members among us that are willing to get in crypto to basically mingle their fiat operation with a new type of payment infrastructure for crypto? Have you already started to look for a payment provider that will provide you with a crypto payment infrastructure yourself?
So we are in the process of that. So to find a good partner who could help us with, it's a struggle and it takes time. So let's see.
Darius, you wanted to add something? Or maybe my question was not clear. I see.
So I'm not sure. Maybe this is only connected to online, so I'm just not getting louder when I speak into this. For us, well, we have in our group of companies, we have two entities, and they are now separate, one for crypto, one for conventional financial services. And this is according to the BOL's guidance to separate those entities. For us, the fundamental question is, whether to merge them back. Right now, it is not immediately clear, if it's beneficial or not. Because right now it's two entities, two different business lines with different management structures, different risk controls and everything. And in the end, keeping them separate might be good for risk control. So not immediately clear right now.
Thanks, Inga.
I think that maybe the advantage here might be not like individual advantages for the consumers, but the advantage of digital ledger technology inclusion into the payment system might be for institutions. Like that means that crypto would be used not by a single individual client, but by institutional financial institutions. That means that payment system may transfer into the digital ledger technology, as it is already, like with Ripple, for example, or other companies in the US already providing payments through crypto, and they expect this crypto payments to rise, to triple, and then in the future to rise even more. That means that the clear regulation might help bigger investments to come into Europe and to change the payment systems overall. And maybe companies do not know yet because they do not have proper technology. But if that technology would help them to save money, to make payments more transparent, and to show that example to them, so most probably even the Bank of Lithuania and other regulators would like companies to do payments through different payment systems. So this is the advantage.
Thank you. That leads me to another question that I was planning to ask later, but we're there. It's obviously an opportunity for fintech. There are a lot of new services to provide, but this is nothing if there is no customer demand. So you rightly mentioned the fact that MiCA was providing a lot more, I would say, safety and confidence for the consumer as to how they are protected. And I think that's great. And I think that will be a turning point for some of us to go into that, trusting the regulation is there to safeguard them. Now, this said, and from a pure appeal, what kind of services, on top of just having a crypto wallet tied to your bank account, what type of services or benefit do you think MiCA, but more broadly speaking, crypto can bring to the consumer, to the business? Is it faster international money transfer? Is it a different way of processing payments? Is it anything else? What do you foresee in the near future in terms of new services or benefits for the consumer? You want the mic or you're okay?
I have one. So my take on that would be that no immediate changes is going to occur. And even in the medium term, it's not that clear to me if anything is going to change that quickly. If we take, for example, cross-border transactions that usually take place over SWIFT network, Ripple has been trying to make a dent in their market share for quite some time, and they have an impressive list of participating institutions. So the trouble is that if you try to connect with any of those institutions, they would always prefer to connect to you via SWIFT, even though they are and you are on that list. And I myself would prefer to do that over SWIFT, just because just because it's all tried and tested thing that everyone in the financial industry understands how it works. With Ripple, if you have like a counterpart that is less involved with crypto, you might not be as confident that they have everything perfectly dialed in on their side and so on and so on. So there's a lot of things that still has to go out of this, so to say, infancy stage there. And I don't think that MiCA really changes a lot in that regard. It does remove a stain of crypto being on the sidelines of financial industry. It does kind of say, okay, it's part of financial world.
It's a step toward that.
Yeah, it steps toward that, but there's still a long way to go, in my opinion.
Thanks. Denas, yeah?
I think, and I would like to speak about payments. Payments has to be effective, I think, transparent, and you have to have stable value. And I'm not sure that all those at this stage of development of, for instance, stable coins are ticking the box. Also, I think MiCA does not allow, for instance, for EMIs to directly access payment systems of the central banks, for instance, Centralink, as we have to keep the crypto assets in credit institution. And we cannot do payments through, for instance, Centralink. So at this stage, it might be a drawback. But another thing is consumers. Do they want to do those, as Darius mentioned, payments with cryptos, and is it convenient? I'm not sure it's for average person. It's very convenient to do, as you need to dig deeper into that.
Thanks. Well, maybe it will get more convenient as the technology and the payment system is more tested indeed. Yeah. So you're telling us that Centralink is not going to transition to the blockchain in the next 6 months, right?
Not at this stage.
Okay. Joke aside, and we discussed a bit about that, but still I think it's good that we summarize it a bit. Basically, and for our members, the idea of, for an EMI, willing to propose new crypto-related service, can we say, would it be right to say that it pretty much corresponds to the process of now asking for extra activity which are within the frame of your license, but which you haven't been authorized to? So basically, you notify the Bank of Lithuania, you update your business plan, you inform the Bank about the Bank of Lithuania, sorry, as to what you want to do and how you will do it, and then you wait for a clearance of the Bank of Lithuania. So even though we don't have a clear answer and we understand it will still take a bit of time, can we say that it will look pretty much the same as it does now?
For instance, if you have already an EMI license, I assume it would work as it's already in our expectation letter when you need to, if you are trying to change a business model, you need to communicate with us. It would be similar, just maybe a more standardized process of notification and what's in it and what's actually evaluated. So it would look similar to that, not like a licensing procedure as it's for like AMI license, but it would be a smaller procedure, I would say.
Thanks. By the way, I want to remind you we have a Slido. I lost the code myself, so if we could have the Slido code, it will be great. You can ask questions for after. This said, and you semi-presented some of the trend of the report that are coming from the survey of the Bank of Lithuania regarding the willingness of licensed fintech to possibly provide crypto-related services. That's super interesting. I understand you may share the result in more detail later. Now I want to ask the rest of the panel. Do you feel around you, being in contact with the fintech ecosystem and community in Lithuania, do you feel like more companies are going to take the leap and try to provide these kind of services? Some that may already have relationship with VSP already might do something differently, or do you think they will maintain the current structure because it's convenient and maybe to some extent safer from a regulatory point of view?
I guess I'm the one who's starting first. So I think that definitely there's going to be those courageous companies that will jump in right at the start. Maybe, I don't know, 10, 20% from the whole market that will do that. And just because probably of fear of missing out. So FOMO, let those crypto lingo terms creep in. And of course, well, in the end, for the rest, for those that are not willing to experiment, it's going to be a demand-driven decision. So if the demand is there, if the consumer actually wants to, alongside, his or her payment account, to have a crypto wallet managed online, and it's not that sophisticated user, that uses his own cold wallet and his own infrastructure, maybe there will be that demand. And I don't know, because otherwise, crypto, if we are talking about these old school fluctuating assets, such as Bitcoin, it's still a gamble. It's still, well, of course, those who gamble, they like to call it an investment decision, but it's a gamble. You day trade, you try to win some, lose some, and that's it. You're not buying Bitcoin to do transactions. Maybe there are some use cases in less banked geographies, but Europe is probably not the best example, and we are here all with the European licenses, so we are not aiming to solve African payment problems probably. We are mostly with portfolios of European companies and consumers in our books.
Thanks. Anybody wants to add something?
So I would like to add that we already have some queries from EMIs about potential issuance of e-money tokens, because as e-money, which is regulated according to e-money directive, because for example, in Iceland, there is one company which issues e-money on digital ledger technology, and it was not forbidden before as well. E-money directive allows you to issue e-money on different technology, including digital ledger technology. So from my, as a lawyer perspective, it's better to have MiCA because of regulatory transparency. That means that companies who would like to use new technology, not maybe all of them, but some of them would like to use different technology, they have very clear guidelines how to use it, and do not speculate that this is crypto as this gambling instrument. That is why I think that step by step, companies who are more maybe technology savvy and implements and operates their own technology may try to start using and start notifying Bank of Lithuania.
Thank you. Wanted to add something?
Yeah, I would like just to add that maybe the situation will change a bit in the future from this point of view, that if the financial institution would not like to go themselves to get this MiCA license, or how you call it, maybe we will decide to acquire WASPs or CASPs now in the group. So maybe this would be as well one of the solutions.
Thanks. Well, that's also one of the great stuff I think MiCA enables. possibly the end of regulatory dumping across the jurisdiction to go where the jurisdiction is the laxer. Hopefully that will stop that. I wanted to come back very quickly on the European Money Directive, I think because that's something which is, in my opinion, pretty important. We're not all lawyers in the room. I understand the European Money Directive to some extent already indeed set some ground for the issuance of e-money. I mean, as the name suggests, obviously. But do you think it overlaps to some extent with MiCA? And if yes, how? Without entering in too many legal details.
I think, if I may answer, MiCA even references e-money directive that basically e-money tokens would fall under e-money directive as it's interpreted now. So I think it just makes a distinction between e-money, which is fiat, and e-money, which is now crypto or stablecoin, and as you say, just and it's one is technologically neutral, another is DLT or similar technology, which is, I think, it's problematic because if in the future technology changes, then how does it apply? And so that would be a tough question. So what you apply, e-money or MiCA or nothing? So that's a struggle, I think, in the future.
Thanks. I wanted to come back quickly on what happened yesterday, namely the fact that PayPal issued its own stable coin for money transfer purpose. I mean, the purpose is pretty straightforward. I think we all remember a few years ago when Meta/Facebook started to try to issue Libra. All the central bank freaked out because I guess feared for a problem in terms of monetary policies and other concerns like that. We see that MiCA to some extent tackles this problem. The question is, do you see that MiCA and possibly what it will bring in terms of push to crypto might be a stepping stone, an enabler for central bank digital currencies moving forward? I think it's more a question for you, Denas, here.
I don't know, to be honest. It's not necessarily Libra which made central banks maybe develop those central bank digital currencies. I think it's more of China, which quite aggressively started to develop one. Yeah, it might be a correlation as well. But I think central bank digital currency could help to include for instance, private stable coins into the wider payment system for instance, for international settlements, because that's a part nobody sees, the settlement part. You know, you see that the payment is gone, but what happens in the back end, you don't know. So I think for settlements, it could be a good enabler.
And we know the European Commission is working on a white paper for digital euro. Is the Bank of Lithuania somehow already involved into the shape, form this could take and the possible relationship with the local financial institution?
I'm not the one to comment. I'm not involved in that. So, but my colleagues from market infrastructure are quite extensively involved in that project, and we work with both European Central Bank and European Commission to implement that project. Because one thing is the design, and then another thing will be the implementation, which every single central bank will have to implement it.
Thanks. Now I think we have a mix of legal, operation, compliance people. So if you had a piece of advice to give to some of our members that are willing to get started or understand better, I mean, aside from the ESMA and EBA guidelines, what will it be? It can be risk management operation. What type of advice will you give them if they want to get started with proposing crypto services or products?
I might start, actually. I think, well, governance, it means many things, but I think what we want to see in terms of governance is that competent board, which is actually making decisions and taking the responsibility for decisions of a licensed institution in Lithuania. Also, enough competent people for different risk areas and regulate compliance as well, because now we have some EMIs are struggling to comply with e-money directive and PSD2, and then you have a third big legislation of MiCA, which you have to comply as well. And also, so as I said in my presentation, stable coins are prone to market risk and liquidity risk, so you need people which are quite familiar with those risks as well.
Thanks. Anybody else?
My advice as well would be, taking into account what Bank of Lithuania already said. This is like, I treat as hygiene, this is mandatory things, and whatever, like regulation or directive you would follow, you need to follow these instructions, what just Dana said. But for MiCA and crypto, I would search for good partner of who issues, like on which technology the e-money tokens would be issued, because it's really important to follow the principles of non-conflict of interest, to know what technology you are using, how safe it is, and like DORA and information security principles are even more important in this MiCA regulation. So the even more focus I would put on technology part, of course, taking into account all other governance issues. But as MiCA says, EMIs and banks are already like treated as they are following these main instructions. So the new thing is for new market participants as CASP or WASPs, the governance part. But the technology is really very important for current market participants.
So my advice is very retrospective, and I would say you should have started long ago, long before MiCA came into force. Even if we take a look at the current picture of the industry right now, so we have a lot of companies that are like 2-3 people in size. So CEO, most of the time someone who has little to do with that company, just nominally does those functions. MLRO, and because of the requirement to have an MLRO, these companies they kind of put that title on the spotlight, like a C-level executive or something, whereas you're just reporting to FIU. And then we have on the other side of the spectrum companies that have like hundreds of staff, separate compliance, AML, risk control divisions. And in those little ones, MLRO is everything. So, I think MiCA is, for some of those companies, is going to be like a cliff. And for others, it's going to be a smooth transition, like, just going downhill on a slide. So that's the difference. And, I don't really think that, okay, we still have like a year or two to prepare for that. But essentially, I think what it means that, those smaller players will have to consolidate, and there won't be as many CASPs as we have right now.
Which is probably a good thing.
Of course.
Indra, you wanted to add something?
So maybe I could just summarize. So the good team internally of the different areas, so from product side, from compliance side, from legal side, and so on. Then as well, a good reputable partner to help with the technology side. And then a proper analysis of all applicable requirements to better prepare and specifically to look into this white paper. So it's a good start, I would say, for preparation.
Thanks. You wanted to add something, Darius, no?
Oh, no.
I think there is a super interesting report. My thought went a bit too fast. While working with VASP more, or with crypto in general more, I think what's super interesting is to understand the specific risk of the industry. There are a lot of risks which are the same as for e-money provider, fintechs in general, and there are a share of risk which are very specific. Moneyval issued a very interesting report, I think last month, on the status of advancement of EU jurisdiction as to the enforcement of crypto-specific regulatory requirement. So I think what's interesting as well, while working with a provider, was working with a CASP, is to understand where they are from and how advanced is the jurisdiction in which they operate, to understand maybe their level of governance, of risk management, understanding adherence to the regulation, of course, on top of your own due diligence, but to have a background information as to where they are coming from and what you may expect from them. But it's still a lot of new stuff coming around. We have some time for question, but I don't have the, thanks. Thank you. Yes, we have quite a few questions actually. Let's start with the first one. It's no filter. I'm not reading, so I'm not knowing what I'm asking basically, so surprise. The first question is, how does the supervisory authorities will ensure that the US crypto institution does not provide services in the EU, especially when everything is available online?
That's a good question, I think.
That's a good question.
But how do you ensure EMIs provide services in EU and not elsewhere? Or others provide, from other jurisdictions, provide services in various jurisdictions and not in EU. So first of all, it's the same processes as usual. You have to have a license to provide those services. If you provide it legally, we will get to know, because we had third parties, other supervisory authorities, which inform us and so forth. We ourselves do the analysis of the market as well. So we will know sooner or later.
They will know.
But there is, of course, but that's one issue. But another issue is how to separate when those services are provided online, whether we are provided in your jurisdiction specifically or across the globe. And that's a tough question always, because, well, even if you're in Australia, you probably can reach e-money, which is licensed in EU online. But I think it's case-by-case analysis, but first thing is always, do we make certain actions to make those services available in jurisdiction they are not authorized?
I think the e-money law says, for e-money, we're not talking yet about MiCA, but you should not actively promote your services abroad. Yeah,
but it's, well, regulation says one thing, but when you apply it, it's quite difficult. So, yeah.
Thanks. Anybody want to reflect on that question? The second question is broad and very blunt. Do we really need MiCA?
Yes.
Well, yeah, as short as the question. Very good, efficient.
No, but in all seriousness, I think the wild west of crypto has to end if we were to like systematically move forward as an industry. So only for that reason it's justified. And of course, consumers have to be protected, have to receive similar protections like they get with financial institutions. And this just helps legitimize the whole crypto industry, which did suffer from stains because of various scandals, hacks, and whatnot.
Thanks. And again, it makes compliance as a competitive advantage. There are those with and those without, and those without might not survive for long indeed. Yeah. The third question is how to ensure that the travel rule, which comes from the recommendation 15 of the FATF, which is also mentioned in the TFR, between VASP and EMIs when they use different technology. So how do we make sure that it's implemented when they use different technology? It's a tough question. I think I could answer it. They have to make sure it's implemented. Now, the Bank of Lithuania will check if it's implemented. As to the medium, I don't think we have anything. I can tell you one stuff which is super interesting. Coinbase has launched an initiative a few years ago, which is called the Trust Network. The idea is pretty much like when SWIFT, decades ago, initiated the SWIFT standard. Basically, if you make payments, you exchange information, but before exchanging information, you have to understand what you exchange, what field do we exchange. And for the travel rule, the problem is that we had no standards. And to some extent, we still don't have any regulatory standard. So Coinbase said, okay, all right, let's do something. We meet, we talk, and we see what makes sense to exchange. So that instead of wondering what we exchange, what technology we use, we all agree on one standard, and then we will push it, obviously, to the regulator so that it becomes consistent and adopted consistently. The fourth question, how does MiCA change the travel rule in Lithuania? So we have a lot of interest on the travel rule. How does it change the travel rule in Lithuania if that's one more reason to check this Moneyval report on virtual assets. You will see where the travel rule is already implemented, where it's already planned to be implemented, and where it's not yet. For us, we still have some work to do, but I will say I very much like the approach of the Bank of Lithuania because there are a lot of jurisdictions who implemented the travel rule regulation without exactly as we see now having any idea as to how to implement it. So basically, if as a regulator you say, we want that implemented, but you don't give the market participants a way to make it happen, it's complicated. So, 5. So we have a question in 2 parts. Just to be clear, virtual asset service provider will have to undergo licensing process through the Bank of Lithuania, and EMI who wants to issue EMTs will have to notify the Bank of Lithuania about intention. This is a question.
Yeah, I think we already answered.
So that's a yes. Second part of the question, what should EMI expect after notification submission to the Bank of Lithuania about intention to issue EMT? So basically, will there be a feedback? Will there be a yes or no?
Well, I think we have a right to provide, according to MiCA, comments for white paper, for instance. Of course, as usual, we'll have comments for governance arrangement, for risk management, and so forth. So nothing much changes from current approach.
Okay, thank you. And last question, can CASP issue payment card based on MiCA, or can still only EMI do that? I told you no filter. Can CASP issue payment cards based on MiCA?
Well, MiCA doesn't regulate payment services. It's PSD2, and now in the future PSD3 and PSR. So according to that, you will need payment institution, which in the future EMIs will be merged with payment institution.
So no without any intermediaries, basically.
Yes.
A question for me or a raiser? Yeah, okay. A question. We've seen the Bank of Lithuania in the last few months hiring a few very crypto-focused positions in the supervision department. Is it a hint as to something which is happening or just...
You will see a lot more.
Okay. All right, we'll see a lot more. Thank you. Anything you want to add to wrap it up?
So I just encourage everyone to read EBA guidelines on preparation and to understand where to the market may go, with you or without you. It's just really take this webinar and into account and read and understand what is going on in the market.
And if I may add, I think it's always good to go back to the basics of risk management, governance, and internal controls, as it always helps. Everything else is details, which you will need to solve later. But first, you need good enough people can solve your problems and good management processes and policies.
Thanks, very good point indeed. Indrė, Darius, Viskas? Thanks a lot. Thanks for coming. Have a nice day. And the association is here. If you have any question, now we're officially accepting VASP, so you're welcome to come to us and ask any question. Thanks.
Thank you, everyone. And the next event is our Summer Fest on 31st of August.
By the way, rebel rule is implemented in Lithuania already since 1st of January 2025. All fields are already now AML law.
Ah, yeah. But it's not mandatory yet. All right.